while all the the most of the other researches are very technical, mine is from not the Solana core protocol point of view. It's from the app layer. So I'll be talking about tokenized equities, and I'll be starting off with the traditional trading landscape. All the trades and the settlements, they happen at stock exchanges, but 99.99% of the traders will never actually directly interact with the stock exchange. You'll be going through a stock broker. So a stockbroker acts as the middleman between you and the exchange, and they do provide value-add services, but they skim a lot of fees in between. And furthermore, the traditional stock trading landscape has too many frictions, especially if you're trying to invest in a foreign stock which is not available in your jurisdiction. Not only are you going to get fees from the broker you open a new account on, you'll be opening a brokerage account on an international broker. You'll also be incurring forex fees, currency conversion, and all that hassle if you go the traditional finance route to trade stocks internationally. And then we proceed and we talk about what exactly is tokenization and what does tokenizing a real-world asset involves. The process of tokenizing is the current implementation of it is basically there will be teams that are working alongside third-party custodians that say take one stock of a Apple unit or Apple share, custody it in a very transparent manner, and at the same time issue the same unit of the assets that they have custodied onto the blockchain. The major part here is that it has to be always one-to-one backed. If that changes, that protocol is not safe, that app is not trustworthy. And most of these protocols already have a very transparent proof of reserves. And that is the overall process, but the exact implementation and the checks involved in the minting as well as the redemption of the assets varies from team to team. So I've only been able to verify and score only two protocols here. One of them is Denari Global, and the other is, I think if people are focused on Solana, they will have heard of this. It only launched in late June, I think, Xstocks. And this has been endorsed by the foundation as well, Solana Foundation. And so, but I've listed each individual unique characteristics because Xstocks is Solana, whereas Denari is a EVM-based protocol. There's details about the various features that they have, and the Denari. I did not find much detail about the process in Xstocks, but Denari has a white paper and they have all the flowcharts. But for comparison, if people want to try and they have their stocks shortlisted, hey, I want to trade Apple, but it's there's too much friction for me in my country or jurisdiction, because even if you want to trade and you are fine with the wire transfers, if you've never done international transfers, you attempt one, you are very likely to have your bank block your account as a safety mechanism based on whatever their algorithms and checks and flags they have on your account. But yeah, feature comparison, backing is the main part of this, because there are multiple teams working on stocks related protocols, but the focus here is specifically 100% backing protocols, tokenized. You will see that protocols that just give you the feature of trading price, which is derivatives, not actual spot, not an actual stock. You don't get any voting rights with them. You don't get any shareholder rights with them. But these two protocols, they offer dividend support as well as the voting rights. Both of them don't offer voting rights because that's complicated, because the actual holder is the custodian. That's where the physical shares are. But on chain, say one share can be divided by, because it's a token, it can be fractionalized n number of times, n number of holders. So that thing complicates the voting process. But dividends are simplified, way more simplified than the TradFi system. The other issue is important checklist is stocks and the securities exchanges. They have a whole truckload of rules and checks and laws around it. So if something goes haywire, or there are sanctioned entities that end up trading the tokens on chain, they need to have those controls and mechanisms to like halt stuff or like claw back the tokens, because those entities are not allowed to trade. So both tokens, both of the protocols have different approaches there. The EVM one only has a transfers blacklist, like so like if you check out Circle or like even Tether, the stable coins, they also have a transfers blacklist, because that's the main thing the EVM supports. But if you come over to Solana, the Xtalk protocol comparison list, they have a transfers blacklist, but they have a shitload of other features that's true token extensions that Solana provides. And like there's a terms and condition there, because most of these are not initialized yet, these features, because like the extensions you pick, they are there you have to pick them at the time you're creating the token. You cannot add and remove extensions once the token has been created. So they are initialized, but they can be initialized at whenever you need to. So that's a plus point there for Xtalks. The other is the creation and redemption process. So in Denari, if you want to participate either as a minter or a redeemer, you have to be KYC'd with them. So this is their strong point. No other person can like have get into Denari without being KYC'd. Whereas Xtalks is the team behind Xtalks is backed.finance. You can visit their site if you want to. Over here somewhere. Yeah. So what they've done is, instead of relying on people to like onboard to their portal and then start minting, they've already pushed out a initial supply which they have themselves minted. And this here it gets a bit sketchy, because and they've already added them to DeFi pools. Like you can find it on Meteora, you can find it on Jupiter, you can find them on Orca. All those pools are already created. So here the KYC checks are a little weaker, but it's still fine because the volume is not as much, but this will eventually become a problem. Mail has a point there. Are the way to not get asset frozen, but that's a weak point, right? They are the way for a bad actor, but from a regulation point of view, that's a weak point. So that's I have to add a lot more about the compliance and the regulation stuff, but that's a very, very good point there. And yeah, so the expectations and the reality, we have the data for that. Like the expectations of the blockchain, the tokenization bit is, the trading becomes 24/7. Right? You have fractional units, the blockchains are up 100% of the time, terms and conditions apply there as well. But that is not really the case, because like if you look at the charts here, there's a dashboard link in here, but I have the chart snippets. Majority of the volume is still on the weekdays only. Weekends, the volume just falls off a cliff. Similarly, the totals by week of day, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, almost falling off a cliff there, as well as the hours of the day. The totals by hours of the day are still in the actual market hours only. There you see some spikes, like in the pre-trading sessions, but that's about it. So the reality is still like the volumes are there, but they are still mimicking the actual market hours only. So there's still a lot of way to go, and I think this is more a thing of because the current price anchor is still the traditional stock market, because that if you see, Xtalks has done 140 million USD of volume, but if you compare it, pick one stock, you check its volume, it will not even be 1% of the traditional market's volume. So if the volume start reaching like escape velocity, like maybe 5 to 10% of the total volume, that's when I think you'll start seeing like the trading picking up even on Saturdays and Sunday, because then it becomes a price anchor in itself. Like it becomes a index price in itself, and it will start competing with the price index of the traditional market. But I think there's a way to go, and there's still a lot of work to be done to make the compliance more robust, especially on the Xtalks end. But yeah, if anyone if any of you have seen protocols that are 100% backed, do let me know, because I'll add them to the report as well. Yep.
Good job. Really,
Yep,
really good,
Alexander,
consistent company.
yeah, one question from Alexander there. Yeah, no, they are 100% backed. I'll share you the doc that I have. You can go and check their proof of reserves, because this is like especially for Xtalks, because this has already been endorsed by Solana Foundation.